Have you ever wondered why Singaporeans are suddenly obsessed with gold? Most people think gold is just for old school investors or for making jewelry during festive seasons. But what if I told you that right now, smart investors in Singapore and across Southeast Asia are snapping up gold bars and coins at record levels while jewelry sales are actually dropping? In this video, I'll show you why this is happening, what most people are missing, and how you can use this gold rush to protect and grow your wealth even if you've never bought gold before. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 850,000 reads and 53,000 likes, and I've produced over 800 videos with more than 350,000 watch hours as of February 2025, also focusing on regional and global economic trends. Let's start with what's driving this gold fever. Gold demand in Singapore just hit a 15-year high, and in the first quarter of 2025, Singaporeans bought 2.5 tons of gold bars and coins, a 35% jump from last year, marking the biggest quarterly demand since 2010. But here's the twist. While we're buying more gold for investment, jewelry demand is actually falling. In Singapore, jewelry sales dropped 20% compared to last year. And why? Because gold prices are at record highs, leading people to see gold less as something to wear and more as a way to protect their money. It's not just Singapore, as Indonesia, Malaysia, and Thailand all saw double-digit growth in gold investment, while Vietnam, on the other hand, saw a drop because of high premiums and a weak currency. Why are investors so keen on gold now? It's simple. Gold is a safe haven. And when there's uncertainty like trade wars, unpredictable U.S. policies, or talk about recession, people want something solid. Gold doesn't go bankrupt, it doesn't get hacked, and it's been valuable for thousands of years. Let me put it this way. Imagine you're at a hawker center and you see everyone queuing at one stall. You'd probably want to know what's so special, right? Right now, gold is that stall. Everyone's lining up because they want safety in uncertain times. Have you ever thought about buying gold bars or coins instead of jewelry? Let me know in the comments if you've made the switch or are considering it. Now, let's talk about where gold prices are going, which is the hottest topic among investors right now. Gold prices hit an all-time high in April 2025, over $4,407 per ounce in Singapore dollars, up 21% just this year, and even after a small correction, prices are still hovering around $4,300. So what's next? Technical analysis shows that gold is still in a bullish trend, with key support levels at $3,260 and $3,200 US dollars, meaning if prices drop, buyers are likely to step in, while resistance is at $3,270 and $3,500. If gold breaks above $3,500 again, we could see another big rally. Some analysts predict gold could average above $3,600 in the second half of the year, and maybe even test $4,000 if global uncertainty stays high. Here's an analogy. Think of gold like the MRT during peak hour. It might slow down at certain stations, which are support levels, but unless something major happens, it keeps moving forward. But remember, gold can swing up and down in the short term, so don't panic if prices dip. That's just the market catching its breath. Do you follow gold price charts, or do you prefer to buy and hold? Share your strategy below. Now let's get practical. How can you add gold to your portfolio? First, diversify your gold exposure. You don't have to buy a 1 kg bar and keep it under your bed. Here are your main options. Physical bullion is good for long-term hedging, but remember, you'll need to think about storage and insurance. Gold ETFs are funds you can buy on the SGX. Just like stocks, they're easy to trade, and you don't have to worry about storing the gold yourself. Gold mining stocks are shares of companies that dig gold out of the ground. And while they can go up faster than gold prices, they're also riskier. How much gold should you have? For conservative investors, 5 to 8% of your portfolio is a good start. And if you're more aggressive, you could go up to 15 to 18%, especially if you include mining stocks. Here's a simple analogy. Think of gold as an umbrella. You don't use it every day, but when it rains, you're glad you have it. Don't make your whole portfolio gold, but keep enough to protect yourself during storms. And when should you buy? Don't chase the price when it's at a record high. Instead, buy when prices pull back to support levels. This is like waiting for a sale at your favorite shop instead of paying full price. What's your favorite way to invest in gold physical, ETF, or stocks? Drop your answer in the comments. Let's zoom out for a moment. Central banks around the world are still buying gold, though not as much as last year. And in the first quarter, they added 243.7 tons to their reserves, while Singapore's own central bank sold a small amount, but kept its holdings steady at 220 tons. Why does this matter? When central banks buy gold, it's a sign they're worried about risks in the global economy, things like inflation, currency swings, and geopolitical tensions. It's like when you see the Kopitam uncle stocking up on rice before a storm. He knows something's brewing, and central banks are doing the same with gold. For us as investors, this means gold demand is likely to stay strong, especially if uncertainty continues. Do you pay attention to what central banks are doing, or do you focus on your own strategy? Let me know. Let's wrap up with some practical tips you can use right now. Gold is hot, but don't get burned. Stick to your allocation plan, and don't let FOMO drive your decisions. Use ETFs for flexibility, as they're easy to buy and sell, and you can adjust your holdings as the market changes. Physical gold is for peace of mind. If you want to sleep well during market storms, a small stash of bullion makes sense. Stay updated. Gold reacts fast to news, so set alerts for major economic data and central bank moves. Think long term. Gold shines brightest during uncertainty, but don't expect straight-line gains. Here's a question. How do you see gold fitting into your investment plan for 2025? Are you increasing your allocation or waiting for a better entry point? Share your thoughts below. So, let's recap. Singapore's gold demand is breaking records, with more investors buying bars and coins than ever before. Gold prices are at all-time highs, but technical analysis shows there's still room to run. Just be ready for some bumps along the way. Diversifying your gold exposure using ETFs or physical bullion can help protect your portfolio. Central banks are still buying gold, signaling ongoing uncertainty in the global economy. Stick to your plan, buy on dips, and think long term. Gold isn't just for the old school investor anymore. It's a smart tool for anyone who wants to protect their wealth in uncertain times. And whether you're just starting out or already have a diversified portfolio, gold can play a key role. If you found this video helpful, give it a like, subscribe, and share it with your friends. And don't forget to comment below. Are you buying gold this year? What's your favorite way to invest? Your experiences can help others in our community make better decisions. For more on how to build a resilient portfolio in Singapore, check out my next video, How to Survive Market Volatility in 2025, the Singapore Investor's Guide. The link is on screen and in the description. Thanks for watching, and as always, stay curious, stay invested, and let's ride these markets together. See you in the next one.